Welcome to GovCon Unscripted, where we dive into the unfiltered stories and strategies from all around the world of government contracting. Join host Chelsea Roberts as she explores how to navigate, thrive, and win in this complex but lucrative industry.
All right. Hey, everyone, and welcome back to GovCon Unscripted. I'm your host, Chelsea Roberts, CEO of Collaborative Compositions. I have with us Geoff Orazem, founder of Inevitable Defense. Geoff, who are you and what do you do?
Hi, Chelsea. Thank you so much for having me. I'm Geoff Orazem, honestly. I've been doing defense innovation stuff for, 10, 15 years now. Like so many of us, started life in the military as a Marine. From there, went to law school, spent a little bit more time in the sandbox. I went to McKinsey for about a little over 3 years to figure out how the world outside of defense worked. Then started my first business, which was a GovTech incubator called Eastern Foundry with my then co-founder, Andrew Chang. That was going on in Crystal City for about a decade. Got to incubate about 200 small government contracting companies, most of which had a defense technology angle. So that really exposed me to how startups were working with all the DoD and other government programs to help engage startups, fund startups. So at this point in my life, I wear 3 hats. So one is as an advisor to J2 Ventures. I'm a very active advisor with them. The second role is as a contractor to DARPA, where mostly focus on helping them with their acquisitions processes, trying to identify opportunities for reform, acceleration, simplification of acquisitions processes, which with a larger goal of helping them engage startups more effectively. And in my third hat, I'm the acting COO for one of J2 Incubatees, one of the portfolio companies that they're supporting.
Very interesting. And I think I'm just going to dive right off here and say, for folks that have no clue, other than the chickens in their backyard may have been in terms of an incubator, can you tell us what that is, how that works?
Absolutely. So an incubator is actually a fairly old concept. It goes back to the 80s, but it's really hard to start a business. When you're starting your first business, you have to do so many things. And a lot of them are specific to you. Hey, who is my customer? What problem am I going to solve? How am I going to solve it? But a lot of requirements and challenges that are pretty universal. How do I get registered? How do I do this part of the legal process? How do I get my accounting set up? How do I build a web page? And all of those bear costs. And when you're, especially if you're a solo founder or maybe just you and a co-founder, it's really tough on both an emotional and just an operational level to get it all done. So the idea of an incubator is if you can bring together 10, 20, 100 small businesses that are doing something similar, then you can provide a lot of resources to them cheaply. So you can provide an accountant that services the community. You can provide the space at a discounted price. It's a lot of ways. It's like the Sam's Club model. It's, hey, you buy a membership to Sam's Club and now all of a sudden you can buy everything cheap because you're buying in bulk. Being part of an incubator, it's a little bit similar. It's like you buy a membership to the incubator and then everything else you can buy from that point on is you're buying at kind of wholesale rates because it's being purchased on behalf of the whole community. So that's what we did at Eastern Foundry. We ended up with 3 locations, mostly in Northern Virginia. And so we were pretty much because everyone was trying to sell to the federal government, a lot of the value that we were providing was helping find those government smart accountants or trying to find proposal writers that the community could use, trying to find people who could help with pricing, being able to use the size of our community to be able to go engage large primes to be able to say, hey, the Oasis recompete's coming up. Instead of you going and trying to find a whole bunch of smalls to join your team, consider doing a happy hour at Eastern Foundry and just meeting a bunch of smalls that you could potentially work with. Or the same value proposition to government, saying, hey, we have a government PM, you're about to do an RFI or you just did an RFI. Hey, another way for you to do market research, find capabilities is just come to Eastern Foundry and we'll set you up with a bunch of people. So that was the idea, and that's what we were doing for about a decade.
Now, I think that there's some sort of parallel lines there to things like teaming and Competimates and having those companies that are in your fold that are similarly situated or similarly positioned that you can ultimately leverage to your advantage when trying to go and pursue opportunities. But I think it could also come across as a pool of your competition, if you will. So have you found that those ecosystems that are in and around incubators, do those become like toxically competitive? Do they ever merge and blend together? Where do you see the drawn lines from those groups of similarly situated companies?
Yeah, this is probably the number one question we would get when people came to do a tour when they were kicking the tires on joining the incubator was, hey, why am I going to have my competitor sneaking into my office, looking into my office
Right.
door to see, do I have our win themes written out for a particular proposal? So that what you're touching at was a significant question that everybody asked. And we did do simple things like we made sure that the glass on the doors was frosted so that people couldn't see in. We just feel to provide that little bit of extra privacy. We just feel a little bit more defaulting to the doors being locked, help build that feeling of privacy. But here's what I would say. Come on, like if you're a 2-person, even a 10-person, 20-person small business in the federal space, how many other federal small business contractors are out there? 80,000, 100,000 others that are winning work. The chances that you are going to happen to be bidding against the same small business that happens to be in the same 100-person ecosystem as you, number one, is vanishingly small. Number two, if you identify a Competimates, okay, fair enough. But you could view that as, okay, there's this small operational risk. They're going to get some intelligence about what we're going to do. But there's a much bigger opportunity for you to team up together because as a 10-person small business, odds are you're going to be hiring, if you win that services contract,
Sure.
you're going to end up hiring a bunch of people to be able to deliver the work.
Right.
Instead of hiring those people, could you team on it to get those bodies that you need? So I think while that was a very real fear, people pretty quickly realized the actual risk was incredibly small, especially when compared to the benefits of being able to, if you're in the DMV, how many happy hours are there specifically around, hey, come meet your future teaming partner at this law firm's happy hour tonight? It's every night there's one of those happening. And so instead of being one of the value props was like, hey, instead of going to the happy hour, having dinner with your family, when you come to Eastern Foundry and you walk in the door to go to work, and when you go to the coffee machine, when you go to have lunch, you're meeting dozens, sometimes hundreds of dozens of other small business partners.
Interesting. And I think that's tremendously valuable, especially for folks that are outside the DMV, because they ultimately have that burden of trying to identify and locate similarly situated companies that they might be able to team with, to partner with, to contract with. And ultimately, it's never easy search trying to find them all locally and they're spread out. So I think having some sort of consistent place where everybody can gather is probably substantially valuable for those companies that are involved. Now, I'm curious, are these things in existence on the dual use side of things? Are they trying to support both companies that are going into defense and companies that are dual use, or do they tend to focus one or the other?
That's a great question. I would argue that definitionally dual use is going to straddle.
Sure.
So if you're a traditional commercial incubator accelerator, there's some percentage of that ecosystem would be dual use. And then conversely, if you have a defense incubator, some percentage will be dual use to the commercial side. So dual use, I would argue, is everywhere. But to get to what I think your real question was, is there a bright line between commercially oriented companies and defense oriented companies? My experience is that there actually is. And so when we first started Eastern Foundry, we ended up doing a big startup survey with Boston Consulting Group, asking them about what are their experiences by size? Are you going after both commercial and defense? And what we found was pretty interesting. I think it was below $20 million of revenue. It's been a few years since I've looked at that survey results. Either 10 or $20 million. If you were smaller than that, it was bifurcated. And I think that's a pretty frequent reflection. As a small business, the CEO is the sales lead.
Right.
You don't really have the financial resources to hire a lot of sales. And so you have to choose one way or the other because you say, okay, I only have myself. Because as we all know, federal is a full-time job. So is commercial. And they have to make a choice. And it's only once they start kind of hitting that 20 million in revenue size where they have the revenues to be able to have two sales team, one commercial, one federal. I think that fact of sales capacity sends people one direction or the others, number one. Number two, I think that defense is just such a closed ecosystem. It's vanishingly small. Whenever I meet a defense startup founder who's not a vet, it's always like, oh, I didn't know that was allowed. And I think it's really hard as a non-vet to come in and say, hey, I know what the military needs. I'm going to go sell it. And obviously, Andrel is a great example of it working.
Sure.
It shows that it can be done. But honestly, I feel like that's the exception that proves the rule.
Yeah.
Is just how infrequently it happens. So I think there's also a cultural piece where the military has a bit of organ rejection for non-military, non-veterans, which creates, on top of all the challenges of doing a startup,
Sure.
now you're having to overcome these cultural barriers and kind of access barriers that the DoD puts in place. So for all of these reasons, I do find it's fairly bifurcated.
Do you find that companies have their prime or their first order of business being in the commercial realm? If they've got a revenue stream that's coming in on the commercial side, is that typically an easier way to enter into the federal market and get into GovCon?
Oh my God, every day and twice on Sunday. And I'm wearing my J2 hat here, and we look
Sure.
at so many companies, hundreds of companies a year. And boy, at least I shouldn't speak for the fund, but I'll say when I see a company pitch that's defense is going to be their first customer, boy, I'm skeptical.
Yeah.
And it's for a few reasons. But I would say the number one reason I'm skeptical is as a new startup, your most valuable asset is not the money you have in the bank. It is the speed with which you can learn about what your customer needs.
Right.
So the most important, I think Steve Blank maybe said that your runway is the amount of time a company can stay alive financially is just a measure of how many pivots it can make. And unfortunately in the defense space, every pivot takes incredibly long time because the time that it takes you to go find your government customer, get them to talk to you, get them to actually take the physical object, or even worse, the software that you've created, and actually use it for an hour or two, give you the feedback that, hey, we like this, we hate that. Those cycles of feedback between industry and government are so freaking slow that it makes it incredibly difficult to rapidly move through those iteration loops to keep triangulating your way toward the correct product that the government customer really wants. Whereas on the commercial side, all the time, if you have an interesting product, whatever, choose your favorite, General Electric probably won't buy from you right off the bat because you're an unproven startup, but they have huge budgets set aside specifically to run funded pilots. Like you can be nested into your future customer, running funded pilots really quickly. And even if you can't do that, you can just reach out to any given company and be like, hey, business owner who you are in my customer profile, would you spend 30 minutes with me giving feedback on this or looking at these mock-ups or sharing your thoughts on what makes your life hard? Like you can do really fast iteration loops on the commercial side. That's very hard on the defense side, which means starting defense first is really hard.
Yeah.
So this is my very long way to get back to your question, which is the most successful route being have a commercial revenue stream. That I think is very much the best route because you can get to revenue and get to product maturity so much faster on the commercial side so that when you're coming to defense, it's number one, your product's 80% of the way there. You just need a little like the quote unquote green paint to get that product to meet the specific needs that the DoD has, number one. And number two, you've got the commercial revenue that's underwriting your operations while you're going through this very long sales cycle on defense.
Yeah, and I've seen similar situations in which companies try to just come at this like first off, and it's not that they don't have a great product or it's not the right fit. It does need that development to be the right product and the right fit. So we have to put that into a position in which you have to put your company into a position in which you can work with that customer and you can iterate. And it does take so much longer to get into that relationship that is formalized or official. A paid pilot with the government is still something that's going to take you a good long time to get in position for and funded and written up, awarded. So, I mean, it is a extensive process. And I'm curious to know like your thoughts. And you mentioned it just a second ago on software. I know the software acquisition pathway is being pushed as like the best way to go. They're all for like smaller, more iterative, more dissected contracts that take it out of the big one legacy prime's hands and put it out there, and to be able to develop iterative sprints under contract. And I'm curious if you've seen any sort of improvement in the way that the government buys software over the past year, 2 years, 3 years, and if that is a trend that you would expect to see continue.
This is something that keeps me up at night, just because it's like I think about a lot on the venture side also. Is, hey, you're taking this company's money from this investor with some implication that we're going to help them make defense sales. And especially if they're a software company, in the back of my mind, I think we're very good at helping our companies. But that doesn't mean that it's the right decision for the company to pursue defense sales at that point, because of this question around the challenges and the costs associated with completing a defense sale. So what I will say is I think there has been some movement away from these mega IDIQ contracts. And I don't really know what's happening with Golden Dome, but I do know that when they put out that recent IDIQ, there were like 1,000 winners.
Right.
It just became, if you were plausibly a helpful company, you got on the IDIQ to accelerate future acquisitions. So like that sort of thing, that's all right, that makes sense to me. You are creating an extremely broad front door that then allows you to have simplified acquisitions with that pool going forward. Love it. Things like the Air Force, or the true dual use as open topic SBIRs.
Yeah.
There's another example of things that I think are creatively done, increased use of OT contracts, creative ways to be able to engage all companies, but software maybe first among equals in that space, access them more easily. Those are all great. But on the con side, I'm just thinking the ATO process. That is still an extremely painful, extremely long process.
Right.
I'm looking at the new CMMC requirements that are pushing more CMMC requirements down to more contractors at smaller scales and on lower classifications of data. If I were king of contracting for a day, I think that the number one thing I would do is just say, you DoD need to create cheat sheets, because I've taken the time, because we look at these things for our portfolio, I've taken the time to understand all of the complexities of CMMC 1. The reality is not bad. Once you get under the hood and you start going through that insane spreadsheet that got modified into CMMC, it's okay. If you've got your Google set up, your workspace, or Microsoft Outlook workspace set up for just basic good corporate hygiene, you're 70% of the way there, and then you can do the rest. It's not bad. The problem is that it's a perception problem, because when you haven't done that, it looks incredibly intimidating. And of course, the government writes the solicitations in a way that allows for the highest levels. The products from this could go all the way to CMMC 3.
Yeah.
And so by the time you actually have CMMC 3 and incur all those costs, you will be making so much money from defense sales that it'll be worth it. You and I know that. But for a startup looking at this from the outside is incredibly intimidating, incredibly high learning curve of knowledge, and it validates all the worst assumptions that they come in with about the costs and the complexities of doing defense work. And I don't understand why they can't create a cheat sheet for what each of these programs require that's not written by lawyers.
Yeah.
Yeah.
You're asking a lot there. The government has to watch its CYA with all the lawyers and all the legal speak. But I think that a cheat sheet, first of all, was a fantastic idea. And I think it would be of value to folks that are both in industry and folks on the contracting side, because I think there's a lot of folks on the contracting side who are just as intimidated as some of these new entering startups, because they've never encountered these types of acquisition styles before or contracting mechanisms. They've never done an OT, and it can be scary. It can seem like it's got some strings attached, or there's going to be some burden that you may be bearing that could send you to jail. Like all of the good contracting lessons will teach you is you sign your name, you could go to jail, just so you know. So make sure it's all perfect and make sure you don't miss a thing. And I think that that mentality and that bias that is built up over years of legacy ways of doing things has created an environment where it's not only folks are scared to break the mold and break in and try new things, but it's creating an environment where their communications with industry aren't tremendously clear, and it's creating, I think, a little bit more uncertainty within the industry community as well. So I think there's a ton of value in explaining some of these things and putting it in plain language. A second grader could understand it. So it's just stupid simple for folks to be able to just do what they need to do to understand that it is not as high a barrier to entry as it is being made out to be in a variety of areas. And one of those things that you mentioned in terms of cost of getting CMMC or getting an ATO, I recently made a booklet of types of ways of going about getting an ATO. And there's a ton of different ways to go about getting an ATO. There's a variety of different kind of ATOs. You can get a continuous ATO, you can get an initial ATO. There's a variety of different kind of options there. And no one really is familiar with the fact that it doesn't have to be so ungodly expensive and so long and arduous to get through. You just need somebody who is familiar with the avenue that you've chosen to go down that can kind of lead and guide you down that path. And same on the government side. It's the folks that are on platform one, that's their prerogative. That's the way they want to go. There's other folks that are in different areas of the military that have different ways of going about getting ATOs. They prefer vendors, a variety of different sort of avenues. And so I think trying to, and they look like such big rocks when you start out, like CMC and getting an ATO, like the RMF process in general, like DCAA compliant accounting, you name it. All of these things seem like such big, gigantic rocks, but I think that if they could be viewed in a more broken down, like little pebbles here, we can do this, get ourselves set up right. That way it's going to be easier in the future, and just build those things into the operating plan from the start. I imagine companies that are doing that foresight, giving that thought some extra time to make sure that they're getting their businesses set up appropriately, are going to be more attractive to venture funds and to other folks and within incubators, I would assume too. That would be a sought after quality to have in companies. Is that right?
I absolutely think so. It's funny that if anybody's listening to this and wants to start a small business, here's my recommendation. As part of our DARPA work, we're looking at a piece of their acquisitions process, seeing if we can find ways to improve it for both for industry and for government. And so in order to do that, we had to read the 670 FAR clauses that are applicable to R&D. So my team and I, over the last couple of weeks, for each of the 670, went through, okay, what does this FAR clause actually mean? How does it actually substantively impact a vendor? Because we were looking for duplicative things or things that could be taken out and through the OT process. But one of the things I was really struck by is how many of the clauses are actually beneficial to vendors. It's giving them things that help them to get advanced payments and to protect them during stop works, or to give them a protests process in disagreements. But the way they're written, number one, is not obvious. That's what it's doing. That's observation number one. Observation number two is so many of the FAR clauses are just, you need to give this training, or you need to have this poster posted in the break room. I don't know if it exists, but somebody out there should just create your first contract in a box that just says, okay, here are all the trainings that your people need. Let's check, did these FAR clauses appear in your award? If so, your whole team needs to watch these trainings. Great. A roll of posters shows up one day. Here are all the posters you need to post. All right. And that you've just addressed, I don't know, not all of them, but maybe a quarter of the FAR clauses in there. And I feel like there are so many things that government could do to clarify and simplify. And to your point, or your question around on the venture side, this is arguably the biggest differentiator for the reason why defense and venture is a thing is because this world is so incredibly lucrative and also so opaque and difficult to access. So all of these VCs started popping up saying, wait a minute, I know a little bit about defense acquisitions. I know people who are buyers. I can help Sherpa these startups through. And by the way, I'm going to provide capital as a way to monetize that service. So yeah, it's something we look for a little bit, but it's also something that we look to ourselves to be able to provide to the companies.
Yeah, and that's really interesting. Thanks for jogging my brain and new ideas of things that I can put together in packages and put out there. So we'll see if that your first contract in a box comes to market.
I would buy it
one of these coming days. I think that would be a tremendously valuable service, especially when you're getting your first contract and you take a look at it, and those FAR clauses are verbose. They mostly legalese. It's very, and by the third one down, you're like, do I really have to read the rest of these? Because these just seem just benign and limiting things that are not necessarily applicable. There's a whole bunch of things that I could say on that topic. I will hold my opinion on the FAR, which is such a great, useful tool and regulation for industry.
Absolutely.
Right? But those posters in that break room are going to be the difference maker between something.
Better have that FAR hotline up there.
Yeah. But so tell me a little bit more about the venture fund and like what that looks like, what kind of your portfolio looks like right now, and what you're looking for in companies these days.
Yeah. So it's interesting because I think just through no foresight of my own, just through dumb luck, I was a little bit ahead of the curve when it came to getting involved with startups in defense. And so I was doing that kind of in the early 2010s with the incubator. And so it's interesting. I've got a chance to see the evolution of industry interest in the defense sector and startup interest in the defense sector. It was like no startup was interested in doing stuff in the defense space through most of recorded history. And then all of a sudden, and I really give a lot of credit to SpaceX, Anduril, Palantir, because it demonstrated that, wait a minute, you can have eye-popping successes in the defense space. So that was one big factor. Then I give a ton of credit to the Air Force dual use, open topic SBIR, whatever. It it's had many iterations and it's learned and improved over the years. But even in V1, what was that, 2018, it did what it set out to do, which was to get the attention of the startup ecosystem that was not paying attention to the defense space as a potential customer funder. And then the emergence and prevalence of OT. So I give the Defense Department a lot of credit on the programs they've run to encourage engagement from startup industry. So that's great. Now, because I was there in that mix running the incubator, a lot of venture funds had the same idea. And, it's like I was saying before, every vet who went to a good business school said, wait a minute, I'm going to start a venture fund and I'm going to have this really great, because I have this really great insight that government's very happy to de-risk and fund technical development through BAAs and those and SBIRs. And then venture really hates putting money toward technical risk. They're really happy to put money against market risk. So if I can help all these companies get to the SBIR to do the technical stuff, I can provide the funding on the commercial side. And boy, this will be great. I'll be really smart. I can then go help these companies sell to the DoD. So there was a blossoming of these funds, I would say, for the late 2010s, largely following, I think, the AFWorks as open topic. There were a few ones that were earlier, but putting that aside, I think that's where it really exploded. I said a lot of them had talked to me, and I'd always said no, politely declined, just because I don't know. It's ventures that wasn't my space, and then ended up meeting the founding team over at J2. And initially, I was a little skeptical because I've heard this before. But what really impressed me about the founding team was their ability to execute. Like, in a lot of ways, on the surface, they were doing the same thing as everybody else. The difference was that they were actually doing it very successfully. Like, they really were getting their companies on contract. They were helping them win the funding. They were helping them connect to the buyer. They were helping them get that first federal sales lead. And so the thing that has always impressed me, continues to impress me to this day, is the J2 core team's ability to execute on just good fundamentals. So yeah, I've been an advisor to the fund almost since its very early days. I genuinely like the team. I genuinely like the portfolio companies. And you asked, so what are the investing trends? Gosh, we only do dual use tech. So if it's a defense only play, no thank you. Things that are kinetic, things that go boom, we don't invest in that either. But outside of those two strictures, it's an incredibly broad field of what is dual use technology. But predictably, we have a very so we invest in a lot of different sectors is the headline. But within that, we have a heavy presence in communications technologies, just because that's one-to-one requirements between defense and commercial. Cybersecurity, predictably, just because the defense and commercial cyber requirements are very similar. Medical and medical devices. So that's looked like everything from prosthetics to drug manufacturing infrastructure. That's been something really interesting. An emerging area that, boy, I didn't expect. A couple of years ago, if you'd asked me this question, I would not have expected this. But one thing that's come in a little center of excellence for us, I think, has been around HR services or government. And it's interesting to see how much of, when we think about government technology, I think we mostly think on the internet or GPS or stealth technology, like big systems. But the government also is running one of the biggest HR systems, like the travel and pay systems that the DoD is running are massive and really broken. So there's been this little ecosystem of startups that have started looking at, a lot of the time they aren't looking federal initially, they're starting state and local, but they're doing really interesting things around helping accelerate the hiring process, onboarding processes, training processes. I think that's another area that we'll expand into is more of the back office tech that's tweaked to meet these peculiar needs of federal or state and local bodies. And that's another area we're pretty strong. I think we're pretty well represented in manufacturing, technologies. So I was like mentally writing down my list. And those are the big areas that we have invested in. But again, if there is a clear demand signal for that technology from the government or a clear interest in funding that kind of technology from the government, we're very interested in looking at the company.
Now, does the venture fund, does that fund companies from the incubator, or is there overlap there?
So unfortunately, the incubator went away. Unfortunately, when COVID hit, we were heavily localized in Virginia and the governor shut down everything. Unfortunately, being that small businesses were our client base, it became pretty clear pretty quickly that they couldn't afford to keep paying rent because at that point, a lot of their government contracts were thrown into uncertainty. So they either weren't getting paid, it was unclear they were getting paid, everyone was going to work from home. And then the governor had said, you can't go to the office. So unfortunately, the incubator was a casualty of COVID. So the fund does not invest yet. As a result, the fund doesn't invest in companies out of the incubator. But we have good relationships with accelerators, other incubators that did emerge post across the country. That is a fertile ground for us when it comes to looking for companies to then go through our analysis and diligence process.
Sure. Now, do you host pitch days, or how do companies get in front of the fund?
The fund? There's an email on the website. Some people do send decks our way. I don't know how people find my email address, but I do get a lot of just unsolicited pitch decks. Transparently, it's probably a relatively low, just because of the volume. I don't need a ton of them, but sometimes I do. And if I think it's interesting, then I'll either schedule a call to take a pitch or I'll pass it off to one of the partners of the fund who will reach out. Otherwise, I get a lot of people reaching out on LinkedIn, connecting, sending decks that way. Certainly encouraged. Transparently, I think the majority of the decks that we get that end up getting funded are referrals. It's a friend of a friend, or it's a fund that we trust, or it's something along those lines. So they're coming to us through trusted networks. And largely that's just a function of reading a deck takes probably, let's call it 10 minutes.
Sure.
And unfortunately, there are just so many decks and you only have so much time because you're doing everything else that you need to do. And so I do worry a lot about, hey, how many really good companies sent me a deck over the last year that I just never looked at?
Yeah.
And that fear of having missed a great company, it does keep me up a little bit.
I figure you could probably make an AI tool for that and have it go through and select all of, based on your previous choices and your
Yeah.
previous interests. It could probably do a good job of sorting through those and picking out some solid ones for you.
Maybe. It's funny you say that. I'm on the cusp of setting up an angel fund with a friend who's going to be retiring from the military soon. From my experience at J2, I love what they're doing, but I think the real unmet need in the market is for extremely early investment, the kind of day zero level investing into defense companies.
Yeah.
The seed and Series A landscape is very well covered with funds, but I would argue that where that SBIR, where $250,000 of SBIR phase one or $1 million of phase two, by the time you've hit Series A, that money is irrelevant to you. It's like, why? It's a waste of time. At seed stage, it's on the margins, right? Like, we're going to say no to $1 million, but of all the other competing interests that a seed stage company has, where SBIR seemed to be really advantageous to me, and having run this incubator, that's my experience, is for the earliest stage companies that it is transformative. And that seems to be a really underserved part of the market.
Yeah.
We're looking at doing an angel fund. We're kicking the tires on an angel fund to meet that need. So
that's super.
If anybody has any feelings, we've been doing customer research, market research on this. We've talked to a few dozen founders, a few dozen angels, trying to get their input before we make a go of this. But so anybody listening who has feelings on this, would love a piece of your mind.
You're opening the door there. So be prepared for more outreach, more feedback, more pitch decks probably, and all the folks reaching out with all of their thoughts, good or bad, on angel investing. But me personally, I think that's really a great idea, a great service, and something that I personally have seen countless times and time again. In that just getting started, that's really where that influx is needed. Once you've gotten into definitely by your Series A, you're well past that sort of initial raise point. You're past that initial level of effort point where SBIRs would be attractive or helpful.
Yep.
And then those companies that are trying to just get off the ground, it's like they see SBIRs and they also are distracted. It's, what do I put my money towards? What do I put my time towards? Do I go with something that might not have the highest P-win? But all of that early stage investment can really help these companies come around and improve their P-win for what it's worth. So I think that's impressive. And I would love to stay up to date on that and see as the developments start coming on that front. You're definitely going to have to fill me in and keep me up to date.
Would love to. Absolutely. So we're going to be putting a little trial balloon website up in the next couple of weeks. So
very
start seeing with, again, it's unclear what this is going to become, but we're getting very positive feedback about the idea. It's a novel approach within angel investing. Yeah.
Once you get that website up, send it over. We'll get it in the show notes retroactively and make sure that everybody's got the opportunity that comes and listens to the show, has the opportunity to check that out and give you some feedback, insights, advice, and probably unsolicited advice at that.
It's all solicited at this point.
Oh, that's a welcome ask on the show, and definitely for the folks in the audience, definitely reach out to Geoff. And what's the best way to get a hold of you? Is that LinkedIn? Is that via an email? Is that your personal cell number?
LinkedIn is probably the best place. Please find me on LinkedIn, Geoff Orazem. I'm the only one.
Perfect. Yeah, we'll get that link in the show notes as well. And so everybody can just scroll down and click that link and get connected pretty quick. And this has been a fantastic conversation. Super interested in what you're doing on the angel side, and keep up the good work with the advising fund and with DARPA. I am confident that you've got a lot to offer the folks at DARPA and helping them improve their acquisition mechanisms and their processes that they're using in that agency right now. So I think that's a great opportunity for you and the team. And I can't wait to see how much faster DARPA gets after working with y'all. Thank you again for being on the show today. Fantastic conversation. For everyone who has listened in this week, thank Geoff, and do your part, leave a heart, share, subscribe, get the show out to your friends. I hope everybody has a great week and a great weekend ahead.
Excellent.
Thanks for listening to this episode of GovCon Unscripted with your host, Chelsea Roberts. Do you have a GovCon story or need guidance in government contracting? Connect with Chelsea on LinkedIn to be a guest on the show or to enhance your business strategy. Don't forget, your network is your net worth. If you liked what you heard, don't forget to subscribe, leave a review, and share this episode with your growing GovCon community.